Dun, 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 dun. Welcome, my friends, to the show that never ends. I'm so glad you could attend. Come inside, come inside. All right, on a day when Roaring Kitty is back on Twitter and GameStop is up 71%, up
71.
$13 today. How great is that? The best tweet I saw was somebody said, not a good day to be an efficient market guy.
You know what the 10-day volatility is in that stock?
No.
As provided by our friend John? 21 million.
Nice. There we go.
Better trade it right.
So we're back. Colin is out and may or may not be on BDE much for the next 6 weeks. He's been sent. He's actually, to his credit, is taking a coding class.
Coding class.
From 12 to 2 every Monday. So we're going to try to record at 10:45 so that we catch Colin a lot. But if he has a periodic absence, it's not prostate. We'll go ahead and kill that joke.
You know how we oftentimes talk about how short sellers like crush everyone? What's great about GameStop is that short sellers have suffered a mark-to-market loss of over $1 billion since GameStop's up over 70%. It's hilarious. I mean,
what's AMC doing?
The volatility and it's got to just drive some people absolutely crazy.
Yeah.
It's almost like oil and gas.
Exactly.
Oil, I mean, gas is a little bit stale, but still. Welcome to the commodities worlds, boys.
Exactly.
Gonna be fun to watch Charlie Gasparino's feed. He's like the nemesis of the guys on the other side of the GameStop and the AMC trades.
Oh, that'll be cool. That'll be fun. All right. So today we're going to talk CalPers and Exxon. We're going to talk about a law change in Vermont. We're going to go to the North Slope up in Alaska. We're going to talk about Macron, who I can't believe all the stuff he actually said. So we'll
we need
talk
to dive
about
into
that in Europe.
For sure.
We'll talk about the IEA, and then election-wise, basically, we're going to postpone it because India's in the middle of their elections. Let's let them get through. We'll deep dive India, and then we've got a couple of other geopolitically strategic countries coming up, so we'll do that. So, Mark, you want to kick us off about CalPers?
Yeah,
and I may go on a rant here, but
there was an FT. It's also on Reuters, which is where I pulled it. CalPers is weighing the possibility of voting against Darren Woods, chairman and CEO of Exxon, board candidacy at this next meeting. And so basically the crux of the issue goes back to Exxon's unprecedented actions of trying to keep the resolutions that Arjuna Capital, who we've talked about and follow this, most of it related essentially to Scope 3 from showing up on this year's proxy and up for a vote. And those general resolutions have seen a declining vote of support over the last couple of years. I think 2 years ago, the Scope 3 or related resolution was supported by 23% in the vote, and last year it was down to 10%.
And that was, we want you reporting Scope 3, kind of the environmental. Okay, yeah.
And Exxon, when it was, when the Engine One activists, board members were elected to the board, basically reiterated its position, unlike the European majors, that it's not going to get on, my words, it's not going to get on the slippery slope of Scope 3 that we've talked about incessantly on this show. The comments from the head of CalPers and also California's treasurer, who is on the board of CalPers, around this set of actions being taken by Exxon in the form of the lawsuits is really a circumvention of what I call shareholder democracy. So it doesn't appear on the proxy, you can't vote on it. And it characterizes an attempt by Exxon to silence debate on these important issues. And so
that's what CalPers is claiming.
Right. Yeah. Now they didn't say definitively that they were going to vote, but against Woods.
I mean, Exxon still, even though follow this and Arjuna have dropped the lawsuit, Exxon's still suing them.
Right.
So But what's interesting to me is the quote from Michael Cohen, who's the chief operating investment officer, chief
investment officer.
operating investment officer. That's what his title is. It's weird. Michael Cohen of CalPers said, quote, "I'm deeply concerned about the case, adding it appeared to be an effort to silence critical shareholders." But is that really what this lawsuit against them really is? What do you think? I'm wondering if it's really about silencing investors and more about, because we talked about this, months ago, that it's more about they're not following the right procedure. What do you think?
Well, I think Exxon's route that it took in going the litigation route was to essentially say, look, we've spent a lot of time and money on defending against these resolutions. They keep showing up. The data points that I pointed out, they're getting less and less shareholder support. And my initial reaction was, in seeing this article, was 2020 called and wants its proxy resolution back. So we've seen really this stuff, particularly as it relates to Exxon, go through repeat votes and see declining support. And so, all this stuff costs time and money.
Absolutely.
Right. So theirs was just an alternative way that, the SEC process continues to allow this stuff to show up and go on and on and on. And they're saying, look, from a practical standpoint, my opinion, not anything articulated by Exxon, is that we're not going to get on the scope 3 slippery slope. Say that 5 times real fast. And, we will continue to address and create positions around resolutions that, have things to do with things that are critical to our mission as a company, which every U.S. listed company has a shareholder primacy objective or mandate. And so let's stop wasting time and money on things that, that are allowed through a much more permissive SEC process. And this is just an alternative for them to kind of fight this battle. And it's completely within reason.
If we were in court and I was the defense lawyer, it'd be asked and answered.
Right.
Move on,
Yeah.
So objection asked and answered. Yeah. So as I thought about this, I thought, what else related to the kind of Exxon annual meeting and proxy process is somewhat connected? Well, you and Colin talked about it in a special edition. It's the consent order that the FTC issued prohibiting Scott Sheffield from being nominated and elected to the board. So they basically took those shareholder rights in the form of an ability to vote, whether you vote yes or you vote no, you have an ability to vote. CalPers was silent on that. And so in my mind, it's at least a bit of an inconsistency. If we're worried about silencing debate and squelching a vote, or preemptively taking a vote away from a rightful shareholder, doesn't this rise to the same standard of you're limiting my rights or eliminating my rights as a shareholder, whether CalPers voted for Sheffield or not?
Or at a minimum, making me spend a lot of money to fight it. Because,
Right.
Theoretically, Exxon could have fought that. Sheffield said, hey, I'll step aside. Let's go ahead and do what's in the best interest of the shareholders. But the thing that's kind of getting me, the evolution of my thinking, is the first tweet I saw was FTC approves the merger. And I'm like, oh, great.
Yeah.
And then it's like FTC approves the merger, but Sheffield can't be on the board. And I'm like, that's kind of crappy, backhanded slap. But, at the end of the day, you'd like to think the Pioneer workers and the Pioneer shareholders would have some representation, because board meetings actually do matter. Things get decided in them and all that. But, you keep watching this. The FTC has turned this over to the Justice Department, which I would laugh if it were funny, but I mean,
It's not funny.
It's really not here. And so Mark and I were talking about this morning because Mark's the one that brought up this point. We went and looked at it. 1970 is when the U.S. peaked oil production. Let's call it 10 million barrels a day. You get to 2006, we're down to 5 million barrels a day.
Yeah.
Financial crisis, 08, 09. But like 2010, I think we hit $110 oil, and the U.S. is at what, like 6 million barrels a day of oil production. We're at 13 million today, plus or minus. So we've added 7 million a day. I mean, that's totally reversed the course. I don't know what the average from 2010 to today has been in terms of oil price. It's been a hell of a lot lower than 100. I mean, we hit minus 37 in there because of COVID, but even pre-COVID, I bet the average was maybe $40, $50, somewhere in there. So the greatest consumer benefit that's happened, this major influx and driver of the economy, oil price, was brought down dramatically by, got to give Scott Sheffield credit for this. I mean, he was a leader in this. It was the Permian Basin, horizontal drilling, fracking, etc. And now the FTC is saying he colluded during COVID and minus $37 oil to bring the price of oil up. You got to give him credit for the previous decade. And all the freaking fucking Amazon vans running everywhere.
I mean, there's another article yesterday in the Financial Times that the U.S. shale companies are accused of collusion over the oil price. ExxonMobil, Occidental, Diamondback Energy are among the companies named in at least 10 class action lawsuits alleging they conspired to coordinate and constrain production.
The only a little background here, and you mentioned that time period where we had sustained, approaching 100+ oil prices over a multi-year period. You had a tailwind of $90 to $100 oil prices, and over the course of that, from that inflection point to 2015, we all know what happened in Thanksgiving of 2014. But over the course of that multi-year period, you spent globally about $600 to $700 billion on what I call drill bit capex mainly. Non-US, non-OPEC essentially was flat during that period. The only savior or from an ability to grow into growing demand and supply growing demand was U.S. onshore, principally the Permian, Eagle Ford, and to a somewhat lesser extent the Bakken over that time frame. And so we were talking about this. What would prices have been had not kind of the miracle of what happened in U.S. unconventional on the oil side? So, I look at that and that Herculean growth from that 5 to 6 million barrel a day trough was basically executed by hundreds of companies acting in their own interests. And over time, as was proven out by a decade of essentially zero returns on capital to the detriment of shareholders, but we got the growth out of it, which was, as you pointed out, a huge, huge benefit to consumers, to industries over the same time period. And
as well as change the whole geopolitical balance of the world. I mean, prior to the shale revolution and oil, OPEC had us. I mean, we were at the mercy of OPEC, and with the shale revolution and us doubling oil production here in America, I mean, that changed the whole balance of the world.
Yep.
And so the FTC is saying they didn't want that?
At 2 to 3 million barrels a day combined, and that's probably not accurate on just an oil side or an oil cut, you're less than 3% of the global market. That, from my textbook days, does not translate to market power and market concentration, which we've also talked about in terms of the industry coming under fire for things like gasoline prices. You look at how fragmented every part of the chain is, there's just no ability to set price. And so you've got thousands of people operating in their own self-interest with no coordination. And we got what we got over the decade that came out of the 2000s into the 2010s, that because we overgrew, certainly wasn't in the company's best interest. And if, these conversations around market concentration, market power are somewhat humorous when you look at other large segments of the market and the economy. I mean, I don't really hear much about the fact that Apple has 62% market share in the U.S. smartphone market.
And you and I talked, I can't remember if it was a Chuck Job podcast or on BDE, but we talked all about the net income margins at Apple versus the energy companies. It was just, it was ridiculous.
If the industry is coordinating, they're not doing a very good job.
They suck at it.
Yeah.
But so last point on this, and then we'll move on. I hate the fact that we have demonized the political process so much that your family gets destroyed. And now we've weaponized the Justice Department to go after people. I hate that. If we're going to start doing that to industries that we demand, that we rely on, and that we have to be good at for our standard of living, and we chase good people out of that as well, this is not going to end well for us. And so FTC, be careful what you wish for when you protect consumers, because dealing with the Venezuelans to get your oil is not going to be a lot of fun.
Agreed. It seems coordinated for sure. I mean, it's not coordinated on the collusion side, but this seems like a coordinated attack against the industry. Because there's been, this is not a new story. I mean, they have come and gone, but it's back, and it's going to be interesting.
I mean, it's the highest profile major and arguably the highest profile independent.
Yeah.
And one of the
leading voice.
The leading voice and leading figures.
Right.
And no pun intended, one of the pioneers in the industry.
Right.
And that pioneering predates a lot of what Pioneer and others have done in the Permian as well, and the long history of Parker and Parsley and Pioneer. So, as an Exxon shareholder, I'd kind of like to have the perspective and the experience and the expertise, both technically, geologically, and organizationally and culturally, of someone at least in a reasonable period of time sitting on the board, helping with that integration from a governance and all the other aspects of bringing these two companies together.
I mean, CalPers has 0.2% equity. I'm assuming you own more shares than they do. So are you voting for Darren or are you voting against?
I've already voted.
Okay.
I've already voted. Nice.
And in full disclosure, I still do. Once you get the Exxon chromosome, it's permanent.
Damn. It's got MNRA. I mean, wow. Okay.
There we go. All right, take us to Vermont. What's going on there?
In more political and government news related to the industry, Vermont legislature last week passed a bill that would essentially charge big fossil fuel companies for the damages caused by climate change. And the basic model for this is draws from the EPA Superfund framework, which, the deepest pocketed proportionally are responsible for paying the cleanup of some of these really awful sites. I mean, we're not arguing that a lot of the Superfund sites didn't need intensive remediation because there's a lot of bad stuff that went on. The fines will be based on calculations and will rely on what's called attribution science. And it seems that the attribution is going to be based on the single factor of what the companies who are charged with the damages, what the company's proportional CO2 emissions are. And so, once again, I bring you to your favorite metaphor or your favorite analogy. What is that?
No, I want you to say it, Mark.
No, I'm not going to say it.
There's no peeing and non-peeing section of the pool.
So I didn't dig in enough.
Damn, you're proud of that.
I love that one.
I didn't dig in enough to see if it's, scope 3 related, but I assume that it is. And so when we have a bad weather, an adverse weather event in Vermont, there's going to be a lot of calculations being made in terms of what can be charged to the particular companies who have operations and retail outlets in Vermont.
They experienced record-breaking rainfall in July, and they say it caused catastrophic flooding, which cost them close to $2.2 billion. But one of these guys quotes in this article, New England had a 60% chance increase in the heaviest precipitation days. For every 1 degree Fahrenheit increase in temperature, you get a 4% increase in the amount of water vapor that the atmosphere can hold. Let's kind of fast forward. Basically, this is a witch hunt after companies that are basically going to be held responsible for these adverse weather events. Who do you blame? Those that are the biggest polluters or that pollute in Vermont, or is it just companies that happen to be polluters outside of Vermont are going to be held responsible?
Good luck.
What's happening
from the Chinese or from India? Yeah. I think what's basically going to happen is every major energy company is just going to close any of their gas stations, retail distribution networks, whatever, and just pull out of Vermont. I mean, why do you want to deal with?
And we're not going to distribute our products for sale to independent operators in Vermont to sell gasoline.
Yeah,
for example.
Good luck in the propane. And
so we've got this hermetically
run off wood chips, and that's what they're good at making anyway, right? Biofuel, known as
pellets.
AKA
pellets.
wood pellets.
Yeah,
they're zero emission according to Europe.
Exactly. Well, the thing
my Traeger does emit a lot of smoke when I'm using those.
It's
wood
a
pellets.
smoker.
Yeah, that's going to be crazy. Although
not surprisingly, there's chatter among other states, enthusiasm about Vermont taking this step, and things that are.
There's also a lot of cheddar.
Yeah, being considered to use this as a template or a model for other states to enact similar legislation.
Yep. It'll get to the Supreme Court, and then they'll read the interstate commerce clause.
Another front on which companies will ultimately have to spend money and time defending themselves.
Yeah. All right. This is like, is this Rasputin? What is this, the Phoenix? What is it? This keeps popping up. So let's do it again. Shell BP, valuation, list in New York.
Yeah. And comments were apparently made in the forum of their earnings calls that, it's going to be way more about buybacks. And I characterize it as a bit of deflection on any kind of imminent relisting in the U.S. away from the FTSE. The valuation gap, I think, is way more systemic and structural, and it has to do with, and just for level setting, the FT, this comes from an FT article over the weekend. The valuation gap is pretty wide, and on a forward cash flow basis, I think it's an EBITDA multiple 4 times plus or minus for the Euro majors, and Shell was the main focus of this particular article because I think that's been the most noise out there about relisting or moving, and Shell did make the move from the Netherlands to the UK to about 2x that for Exxon. And so kind of what's at play here is a relisting really going to do the things that reinflate the multiple for the Euro majors or close the gap? I think it has more to do with the fact that the balancing act, shareholder versus stakeholder issues in Europe is a lot more complex, a lot more difficult than it is for companies who are incorporated and listed in the U.S., which is, as we said earlier, the real singular objective of U.S. publicly traded companies is shareholder primacy, and that is profit making. And so there's a lot of stakeholder things that even if you listed in the U.S. and are still headquartered physically in Europe, you're going to have to deal with. And that extraction and move, I think, would be incredibly
I mean, it's a pain in the ass
Hairy.
to
Well,
move.
and I didn't like your answer last time I asked it, so I'm going to ask it to
Wow,
you again.
thanks, Chuck.
Is this the friction that we're looking for?
Exactly. Now, I do think there is an element when you look at the cash flow streams from Exxon versus BP and Shell. A lot of BP and Shell is trading type earnings, and they just shouldn't get a higher multiple. So I do think the European, I do think the renewables.
Which answer do you
angle and all
like last time?
Give it this time.
What was the answer last time?
I'm tight holing you on that. I want to see what you're going to say this time. I think there should at least be some of that because of the earnings component. But
I agreed with you, I think, last time, but let's create some friction.
all right.
Shell came in the first quarter 20% above profit expectations at $7.7 billion because of their liquefied natural gas business and their trading operations. Now, what we don't know is how much of that was trading. It could have been 100% driven by trading. The challenge with trading is CFOs hate trading because all the margin risk, they have their balance sheets tied up in trading. That's the biggest problem with it. Now, trading, if you're good, like Shell and BP, which have really good trading positions, and they see the market better than just about anybody, they can make these huge trades and make a lot of money because they know what the market's doing. The challenge with that is trading in and of itself is not super valuable, except it can help you hit earnings.
It's
a hedge.
lack of visibility and its predictability, which is inherently
Lower multiple.
Lower multiple.
Yeah.
So I agree with you, but if you're Shell, they just hit their estimations or achieve their estimations or went above because of their trade.
There's no doubt when you have the physical assets that trading is a less risky endeavor.
Yeah, but usually, like an
have.
Exxon position is, we only hedge our assets because we want to.
Right.
It's hedging risk, and in the BP and the Shell perspective, they're not hedging risk; they're taking risk.
Yeah,
and I think that
line.
may be changing for the U.S. majors, particularly Exxon. You know, they saw kind of what was available in terms of those risk profits from trading in 2020, 2021, and missed out on a lot of those. But is that the path to multiple expansion? And I would argue consistent with the point you just made, which is it's not.
Having spent time in the trading operations, one of the things I've learned is BP and Shell have in some ways an unfair advantage. They can make money, and they're making money trading, so they're going to continue to do it. So I wouldn't shut it off. And I'm not sure how easy it is for Exxon to jump in, because part of it is cultural. I don't think Exxon has the risk appetite and profile to trade on balance sheet.
Yeah.
But one of the greatest
to pay people the ridiculous amount it
takes.
That's
anti the Exxon Shell culture. loses some of their better people to
Vitol
shops. Yeah, absolutely. If you want to take the most risk, go to Vitol. But they crush it. They do deals that no one else will do.
Right.
Now it's funny. One of the quotes in the article from one veteran energy banker, to me unknown, quote, "Investors do not trust Shell and BP to do deals. They want to see consistent returns." End quote. We don't trust you to do deals. Just deliver us the money.
Yeah. But there, and I was just jabbing you on that. But there is definitely something to the Exxon mentality of we make money extracting oil and gas and selling it to end users,
and soon to be minerals, right?
Soon to be minerals in Arkansas, but over the forays that BP and Shell have gone into in renewable world, et cetera.
I think in the recent past that BP and Shell have had to take the position that responses to ESG issues were more actionable in the form of, BP spending hundreds of millions on offshore wind leases in the North Sea, things like that. Whereas U.S. majors can take a much more measured approach, and they have. But when you expose that much capital, was it some of the criticism of BP was, why are you spending are investing at a rate multiples of what the market opportunity is developing from a demand and pricing standpoint in some of these renewable segments. They got way out over their skis, and those dollars of capital are inherently sunk until those markets recover. And the clock, meanwhile, is ticking, and it has been, I don't know what the proportion is, it has been a drag on the Euro majors' return on capital employed, which investors have been telling you since certainly 2014, 2015 should be your priority. Back to you spent a bunch of money doing great for society and businesses and growing way faster than demand growth, but you paid for it as an investor in poor to zero returns on capital employed.
So let's use this as the get out question. I'll go to you, Kirk. One, do BP and Shell move listings to New York? And if they do, what happens because of it?
No, they're not. They're not moving. I mean, it was hard enough to move out of the Netherlands for Shell. They're just looking ultimately. I don't think it's really about relisting. That doesn't change their multiples I think the three of us agree. It's not really about where you're located. It's more about the profile of your risk. And that's not going to change. So I think that they're trying to change it by the recent announcements that we're kind of not doing these silly environmental type deals that aren't returning capital. Let's go back to returning capital on a consistent basis. That should move their multiples closer to the US based companies, but moving to the US is not going to help them.
Do we see them move, Mark?
I think they ultimately will. I think this continues to be.
I ultimately think Houston gets both of them.
I think we should do a wager on this, boys.
All right.
How much do we bet, Mortimer? $1.
$1. I like that.
$1, boys. What's the timeline?
No, 18 months.
2 years.
2 years.
2 years.
All right.
You good with 2 years?
2 years. Let's
so
go.
You're no, we're yes. All right.
Will Collide be able to remember this?
Yes,
they will.
Exactly. We'll be able to check Clyde.
And you think everybody's going to be headquartered in Houston?
I think
ultimately.
we're coming to Houston. Yeah.
I don't disagree with that.
All right. Take us to Alaska real quick, because you were telling me this story this morning. I didn't know anything about it. It was fascinating.
It's kind of like Shell Day. Well, I got a call from a former colleague and friend who knows that I spent some time early in my career in Alaska, and North Slope is always an area of interest for me. But there is a small company, private, out of Dallas that owns some leasehold in an area called West Harrison Bay, which is directly north of ConocoPhillips' Willow project. Now, West Harrison Bay leasehold is state land. ConocoPhillips' Willow is in the NPRA, which is federal, obviously. And so there was a recent hearing by the oversight committee with the Alaska state legislature that at which Narwhal appeared. And the issue is Shell has, in the middle of the West Harrison Bay area, has its leases have been unitized under what's called the West Harrison Bay unit. Shell took those leases in 2012. And Narwhal's argument is we haven't seen them live up to, and the Department of Natural Resources has not enforced their Shell's obligations under the terms of those leases in terms of getting a work program done. Shell has said, we want to find an operator. We don't want to operate. If you think back, not too long ago, they spent north of $7.5 billion in a dry hole in the Chukchi Sea.
Yep.
And so there's this, and at this hearing, while Narwhal was present, the DNR was not. The Department of Natural Resources was not. Their reasoning the day after in a letter that they sent out was, we're in the midst of active litigation that Narwhal has filed on these issues, and there are confidentiality things that are going on around this. Part of the, you can find it at a place called Alaska Landmine. There's a podcast with Narwhal's CEO that's pretty interesting, talking about this hearing and the whole kind of history of what's led to where we are now. And so Narwhal has said we are committed to drilling a couple of exploration wells on our leasehold here in the next, and I read it as 2025.
Right.
And so if you know anything about North Slope exploration wells, it's not for the faint of heart, both in terms of risk and the ticket size of those wells. But given what's happened with Willow and this impasse or this inertia with West Harrison Bay, you have a continuing protraction of a timeline to get anything done to evaluate the potential, which Narwhal estimates for the benefit of the state of Alaska is something on the order of $20 billion in future royalties, which for a state that, has a pretty robust, primarily oil-funded permanent fund, that's a pretty big deal. And so you've got the head of the oversight committee, I think spent years as a lobbyist for the industry. And so it's kind of the Fisher cut bait Shell moment, given that they're apparently or allegedly beyond their deadlines for committing some minimum level of work in an exploratory work program. And so, Narwhal is kind of out front talking about this. My thought was, in discussing this was, or thinking about it was, is there some invisible hand going on here related to all the friction and dust up we had around Willow and the Biden administration finally granting approval from a scaled down footprint of Willow. And we're just not going to be confronted with this type of decision making. Although it's state lands, is this part of the larger conversation, kind of help us out here in pushing a more anti-development type of stance. I don't know. The DNR is being taken to task for not enforcing the terms of the lease. And so, or the lease says on Shell and the West Harrison Bay unit, the last point that was made in the article, or one of the primary points was, look, Shell kind of, my words, got egg on their face when they relinquished their position in Guyana right before Exxon made
the mother lode
right. Discoveries in the Guyana Basin,
by the way.
So I don't think Shell wants to operate or have significant focus and portfolio spotlight on the North Slope. I just think that's mainly been their history. But also it's I think from an optics standpoint, it's a trade-off that they are willing to make despite the potential of the North Slope.
And I'm as big a tinfoil hat person as there is on the planet. And you were telling me this morning this story, and it was interesting. I thought about it just a little. I think if the feds are leaning on Shell, it has to come public, because the one thing Biden does, the administration, they lean on somebody so they can get credit with their environmentalist group. Hey, we delayed LNG.
Right.
Every time they do it, they make sure they can get credit. So it'd be interesting if kind of at any of these fundraisers or whatever, that's the way it would sneak out. If the feds are actually doing it, they'd be taking, and by the way, we pressured Shell not to do it. I do think it has to come out if they were doing it, so they could score their political points.
Well, and there was a long ago firsthand experience on the Valdez project when we had a group from the lower 48 post the first season of cleanup, and the federal agencies and the state agencies were literally packed into the helicopter that was following us around on this private tour. And every time we landed to show them, what they were seeing on CNN was not completely accurate in terms of the condition of, and we took them to a group of shorelines in Prince William Sound that we termed the Dirty Dozen. That was known as the Dirty, so the worst of the worst. And I remember every time we landed and got in our group and talked about it and toured around a little bit, someone from that other group was looking to peel these guys off for private conversations.
Yeah.
And so there was a lot of, federal and state coziness in how things were conducted. So, obviously at that time, I think the federal government, the administration was looking for some credit for getting involved and doing, quote unquote, doing the right thing.
No, that's exactly right. All right. One last thing, we may push the cleaning summit to next week just because we're running out of time. But let's go to France.
I mean, Macron.
This is yours.
A couple things. First is that Macron's been touting this $15 billion in overseas investments into France. Amazon, Morgan Stanley, Pfizer, and others have announced. Microsoft are announcing that new projects in France. Now, this is after we've already talked about France turning on their nukes, more nukes, building more nukes, lower price. It's cheaper to manufacture. It's a cheaper place than Germany. Germany's been upset because France is turning up their nukes, and Germany's like, don't do it because we're screwed. So it's interesting. France is about to
it's like Macron,
come back.
Like he grew a pair of balls or something. I mean, he gives this speech and then he sits down with the economists to give this interview, and he literally, you could call all of this stuff "Our Europe Can Die." That's kind of the title of his speech. And he's like, we've got to get collective to stand up to Putin because America's not going to be there for us. He says we're way behind technology and China's kicking our butt. We need stimulus, deregulation. And then he was worried about the growing populism in Europe. But the interesting thing is he's talking about Europe needs to be an integrated energy market. It needs to be an a power market to be able to have the wherewithal to industrialize, to take on the rest of the world. I mean, Mark and I were joking. It sounds like somebody that's talking their book,
That's right.
But on nuclear power. But at least there's a growing realization in Europe that we can just decay into nothing. And it ultimately does come back to energy.
Well, regardless of whether Macron believes it or not, that Europe needs to be collective, France is just moving forward again. I mean, they're moving forward. It's interesting because Lilium, a German startup, is building a 400 million euro factory. They assemble vertical takeoff electrical jets, which seems pretty cool, but they're doing it in France. Ooh. So if German manufacturers are building in France, that is a big, slap in the face. And if I'm Macron, I'm saying, hey, Germany, keep doing what you're doing. The rest of Europe, keep doing what you're doing. Everyone's coming here. We have cheaper energy.
Yeah.
And we'll put this up. I sent this graph around. Chris Martz tweeted and was just talking about a longer dated history of what individual countries cost in something called overnight construction costs, US dollar equivalent. It's pretty dated back to 2010 in terms of dollars per kilowatt for nuclear, and it's a pretty nice color-coded scatter chart of the history of each individual country's build-out experience with nuclear. France is one of the lowest cost builders of nuclear. U.S. hockey sticks kind of leading in from the mid-'70s into 1980 to be completely uncompetitive, which is very related to what we talked about with Bob Kuntz when he was here talking about the NRC and the impediment all that is to innovated, faster nuclear development within the U.S. So France is certainly operating from a position of strength.
Yeah.
And why you would want to dilute that strength when it has pretty significant growth implications from an industrialization standpoint. Maybe he's just being a good EU citizen, but there's quite an advantage, that France could take if they chose to push it.
And a little bit of a lesson for us, no matter who wins our presidency, whether it's Biden or Trump, both will be in the second term and no prospects for reelection, right? And that's where Macron is. He's in year one of his second term. He can't run for a third term. So maybe this is the Macron we see for the next 3 years, leading the charge to bring Europe together and become a formidable force. And it starts with energy. So there we go.
I mean, quickly people are making big investments into France, which is crazy considering that, just 5 years ago, energy prices were not the lowest in Europe, and doing business in France is actually kind of difficult.
Yeah,
having invested in a company that went through bankruptcy, I can tell you the ins and outs. It's difficult, but I think Macron is starting with energy and moving. We'll see what kind of legal changes are going to be made as well. But
literally in the last 5 years, they've gone from having 75% of their electricity generated by nukes and proclaiming that they wanted to get below 50% and decommissioning plants to now we're building more. Kind of crazy.
Yeah. Awesome, man.
All righty. Thanks everybody for joining us this week. We hope Colin has learned his software. We'll go check in. We'll update next week on what he learned to code. If you enjoyed the show, share it with a friend. This week, we're heading to Energy Tech Night, Wednesday night in Fort Worth at the 411. If you listen to BDE, hit me up somehow, and I'll put you on the list if you want to come. Then we're going to hit Doug the next day. Kirk, you missed us. We were talking last week. I had dinner with Rich Eichler. They have AI Alley at Doug this year.
Really?
So me and Rich Eichler, these two boomers, talked all about AI the other night at dinner.
What's AI again?
Yeah, exactly. That's where it started. But see, you had something?
No.
Sorry. Gotcha. Peace.